Hi, welcome to the Market Alert for Wednesday the 29th of March 2017. So yesterday, as I said in yesterday's Market Alert, the market had found support and expected it to move higher, and that's precisely what it did. And here you join the recorded trade and you'll see we've got the consumer sentiment figures coming out at 3 p.m. and as I said in yesterday's Market Alert, consumer sentiment is fine. You don't want to be in the market with the FOMC, interest rates, crude oil, etc. But consumer sentiment it shouldn't be a high impact use item, it should be a medium impact one. But there you can see the news came out and it was a lot better than forecast, coming out at 125.6 as opposed to 113. That was also good news for the Dow as well, and there you'll see the reaction straight through the scalp, and then I move the stop to the scalp level there, and then wait and see what the market was doing. I was hoping it was actually going to travel up to this area here, which is the 20,600, but the market failed to do that. As you'll see, it came back, stopped me out at the scalp, and then the market traded lower. Then it found support, so we got another buy signal, and then off we went again. Got a sell signal, but the buy signal was taken, and what we're looking for here is for the market to take out the scalp and drive through this resistance here. So that's what the market did, as you'll see in just a moment. It took a while to do it, and then you'll see me redraw this in here, and we've got to move the stop again to the scalp, and then you'll see me move to break even. And now as the market's making the rising lows after the scalp, I will then start tucking underneath, as well as the market only wanted to go up. And if you remember from yesterday's daily chart, which I'll just jump to, we drew in the 62 and 76%. We could see that there'd been some buying coming into the markets off Monday's bar, and that's why the prediction was for the upside. So back to the live trade, you can see the market coming back, and now it takes me out for 45, so about 65 points for yesterday's trade. But then as you know, on Tuesdays I'm not here in the evening, as I'm always missing in action, spending some time with my wife, ballroom dancing Tuesday evenings we have together. So out of the market, but you can see the market continuing to move higher. Now, one question I'm asked is, how can you actually stay in this trade a lot longer? Well, there are two ways to do that. You could use 100% extension and trail that underneath. Alternatively, you can use the moving average, which as you'll see here, the market comes down and touches it, but fails to actually close below it, and that's the important bit, is failing to close below. So let me just move this on. You'll see the market coming below, but then it fails to close, and then it's free to resume. And there you've got Kaplan talking from the Fed, and you'll see the market continuing to move higher there and heading up towards the 20,700 level. And then we have another buy signal, but don't forget we've already had over 100 points in this market, and then it's starting to look a bit weaker. We get a sell signal coming in, and then prices move lower, and then that's as much as I got, because when I came back, that's the state of play. But you can see there the buy signal. As the market moves higher, weakness comes in, and as I said also in yesterday's market, the first hour is likely to be your best hour. It did continue on through later on in the session. There wasn't any selling around to bring the market down, but again, a profit is a profit. It is as simple as that. So if we have a look at the bigger picture, we've got the market moving to the upside. We're heading towards the 62 and 76% retracement. The volume was a lot lighter than I thought it would have been for yesterday. I thought there may have been a lot more volume in this bar driving the market up. So the market's going up on fresh air once again. News wise today, we've got crude oil inventories. That's really the main one today. Evans is speaking also. That's at 3 p.m. and then 3:30 we just got the crude oil figures. These haven't been as high impact as or reactionary as they used to be, but saying that crude oil prices have continued to move lower, so let's see how things pan out a bit before actually being in the crude oil figures. But they used to be pretty wild. They are sort of taming down, as it were, a bit, becoming a bit more less reactionary. So we've got that, and then finally we've got the implied volatility, and here you will see that the market has dropped to 908 as the market moved higher in yesterday's bar. So that's the correct relationship, the right relationship, normal relationship for the implied volatility versus the stocks. So that's it for today, but today's also going to be a very interesting day, as you know that today is Brexit Day. It'll be interesting to see how the markets react. The pound is down on the overnight market, but then you'd expect that. I also expect a massive surge in the pound following Brexit as well, because the decision will have been made, the boil will have been lanced, and the healing process, as it were, can be started. But yeah, let's see what happens as far as that's concerned later on today. I don't know what time she's signing it. It's probably going to be midday or somewhere around there, unless it's earlier than that. But I haven't seen anything yet. Mind you, I haven't been and looked for it. I know she's signing it today, and that's all that matters. But it will certainly be interesting to see if it causes any turmoil in the markets, or whether the market, as I say, says, right, it's all, the decision is made, we've now got to get on with it, and the pound starts to become stronger. Right, that's it for me. I will see you later if there's something to report. Other than that, have a great day, and as ever, thanks for watching. See you in the next one.